It's about that time of day again. Boy, that time flies when you're having fun. My name is Joseph. It's Tuesday evening, January 31st, 2017. Welcome back to your nightly newsletter. We're covering crude, S&P, gold, euro, and FDAX this evening as we wrap up what has been an incredible month of January and get ready for the first day of February. Crude is bearish after a strong move down off the highs, telling us that sellers will likely try to sell the next test of the moving average, but a rising support trend line is getting in the way, which may develop into a very important triangle ahead of tomorrow's inventory report. The S&P is bullish after a strong move higher to finish today's session, and the buyers will definitely watching closely to see if this recent move develops into a spiking channel or a possible hidden channel tomorrow. Got a really great chart on the E-mini ahead of tomorrow's FOMC announcement. Gold is bullish, but with an overshoot at the high of the channel, combined with a falling resistance trend line coming down overhead, we expect the buyers will be patient to wait for the overshoot to the opposite side of the channel, where they'll have more incentive to buy low tomorrow. The euro is bullish and trading sideways at the double up target this evening, which tells us to avoid buying into the highs and look for more reliable buying opportunities back at the low of the range tomorrow. And of course, the FDAX is bearish, coming off a test of the triple down at the low of the channel tonight, which tells the sellers to beware selling low and focus on selling high up around the high of that channel and the battle zone. Boy, we've had a great week, a great month of January. I got another great newsletter in store for you guys tonight. You know how we roll here. Always got a great plan of attack coming for tomorrow's session. Before we jump into our charts, though, I do want to remind you the only place to watch the full-length version of this video is on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry. There's a link in the description of that YouTube video. Follow that link and come join me on the blog for the full-length version and analysis on all 5 markets. While you're here, don't forget, join the mailing list. I'll send you an email every evening when our nightly newsletter goes live. Follow me on social. I'm always posting important updates throughout the day on my various social media feeds. Follow those in the lower left-hand corner. Download those charts. That's right. How easy is this? All the charts you see me using in tonight's video, you can download those charts by following the link below tonight's video on the blog. And please don't forget to grab your free pass. You're going to learn more with me in 90 minutes than you will anywhere else on the interwebs. Grab that free pass and come out and join me as a guest for a few days this week, right, or next week, right, as a guest in our trade room. And don't forget, if you're here for the first time, we got a great frequently asked questions page on the right-hand side of the blog, and I'm always here to answer all your questions along the way. So keep in touch. Keep in touch. Boy, I can't remember a more active, a more successful. What a great month of January we've had. End of the month, though, means a brand new opportunity here coming in the month of February. Hope you guys do well with us this week, and of course, this month of January. We're off to the February 1st, of course, Wednesday tomorrow. We've been talking about this since last night's newsletter, right? Today, of course, or this being the first week of the new month. So we got non-farm payrolls on Friday, right? We got the employment number on Friday. That's coming down the pipe. Tomorrow is Fed Day, right? 8 times a year, the Federal Open Market Committee. Let's get this. Where is it? Yeah, 2 o'clock tomorrow afternoon is the FOMC announcement. That's going to be the big headline news tomorrow. And anytime we have a big news event like that, we always know it's going to be a little bit lower volume leading up to it. So it's always a little bit difficult. Fed Day or FOMC Day, Fed Day, right? Always on a Wednesday. Announcement comes off at 2 o'clock Eastern time tomorrow. Typically speaking, and you know, this world's doing some crazy things right now, but typically speaking, on Fed Day, everything's pretty, relatively normal up until about 10:30, 10:45, 11 o'clock Eastern time, when all of a sudden the volume drops. Traders start to go to lunch early so they can come back from lunch early and watch the fireworks, right, that come out for FOMC. Markets like gold, the euro, and the S&P will likely be the most affected. The DAX will be in there too, any equity indexes. Really, crude oil is the one that really won't be as affected. But, again, late in the morning, I'm expecting to see low volume across the board on all markets tomorrow because of the afternoon news at 2 p.m. Eastern time. So be aware if you're trading gold, euro, or S&P tomorrow, they are going to be susceptible to low volume, and usually it's usually one or the other. The market's usually either kind of fluttering higher as the news comes out, or it'll be completely range bound. So we'll be watching to see for a possible trading range right ahead of tomorrow's news. Oftentimes, though, these markets will kind of flutter higher or flutter lower on real low volume. But again, most important thing for tomorrow will be After 10:30, start keeping an eye on the volume, and you'll see as the price action starts to calm down as we go into lunch. That'll be your cue. That'll be your cue that it won't be time, right, to be trading more. Go to lunch, come back, watch the fireworks, and as I always remind you, there are so many times where we can find reliable, tradable opportunities. During news events are not one of them. I know that as a new trader, I would often think I should be trading news because that's where the big moves happen. But this is a rookie mistake, because what happens when you have economic news released, first of all, there's no way of predicting what direction it will go. So you really have to wait for the first few candles and then try to chase after that move, unless, of course, you're like Russian roulette with your account and you just want to guess before the news comes out. So I wouldn't recommend guessing before the news comes out, right? And I wouldn't recommend trying to chase because the liquidity issues are so difficult, right? It's difficult to get in and get out. Your stops won't hold. You can get some really big moves, but the problem is when you trade major economic news like the FOMC announcement we're going to see tomorrow afternoon at 2 p.m. Eastern Time, or like the non-farm payrolls on Friday at 8:30 a.m., right? When you trade major news like that, you're susceptible to real sharp spikes up and down. Your stops won't protect you in that situation, and it leaves you susceptible to get a blown account because of it. So like I always say, there are plenty of times to trade every week, right? We got to sit tight around major economic news. So promise me tomorrow you won't gamble around the FOMC announcement. At least I can sleep better at night telling you to be very, very, very careful tomorrow with the FOMC announcement before and after. I'm sure some of you guys will choose to gamble, right, with the report tomorrow, but at least I can sleep tonight knowing that I gave you guys, right, the who, what, where, when, and why. Now, speaking of tonight, we got some news coming out of China tonight at 8 o'clock here, right? We got some manufacturing news coming out of China at 8 o'clock tonight. All the news happening overnight is probably going to kind of take a back seat to tomorrow's FOMC announcement. So be aware. We do have some news coming out of China here overnight. If you trade in the overnight Asian session, we've got some major news from Great Britain tomorrow at 2, from France at 3:50, and of course Germany right shortly thereafter, right, the manufacturing numbers coming out across the board here. So again, under normal conditions, those will be recognized as market moving events, right? But with tomorrow's FOMC announcement, I have a feeling we're going to see that, right, really take center stage. As we go further into tomorrow's session here, we have, of course, major news tomorrow at 10 a.m. and 10:30 a.m. The ISM manufacturing number is an important news event tomorrow morning at 10 a.m., so be aware of that. And if you're with me tomorrow morning, the trade room trading crude, we know, of course, we got the petroleum status report, the inventory report tomorrow, right, at 10:30 a.m. A lot going on, as you can see. So really what you want to remember is all markets will be affected by the FOMC announcement. Regarding the petroleum status report, the inventory report, we want to give crude oil a good 15-minute buffer on both sides and make sure we don't try to chase after those big moves, right, that happen. Again, there are plenty of times that we can trade every day and every week here. During news is not one of them, right? So be watching for that volume to dry up quickly here tomorrow morning, early in, early out, really no matter which market you're trading. Careful around that major news tomorrow. And don't forget, we're going to do this with all of our students, all of our clients tomorrow morning at 8 o'clock Eastern Time. So come out and join me, right? You don't have to do this alone. Our advanced members, of course, have unlimited access to our trade room every day. Let's keep going here. Let's keep going. Jumping into crude, S&P, gold, euro, a little bit of FDAX. Crude is bearish after a strong move down off the highs. Look at that strength coming off that highs. That tells us that sellers will likely try to sell the next test of the moving average, but a rising support trend line appears to be standing in the way, which may develop into a triangle ahead of tomorrow's inventory report. You can see that rising support trend line and that falling resistance trend line. So we may end up seeing this turn into being a triangle tomorrow ahead of the inventory report. Whenever we see a strong move in one direction like this, we give the bears control and we assume they'll be looking for another leg lower, right? So one big leg, we're assuming now, right, that sellers would love to get another big leg lower, right? So keep an eye out for that tomorrow. I don't want to say it's not likely, but it's it doesn't look very likely. It doesn't look very likely at this point, the way it's kind of stalling out here at this trend line. But if we do get a run lower here overnight, right, you know where your target will be, right, using that strong move down, right, nice easy target. Obviously, the short-term objective right now is to get back down to that low of day, right, but again, you can use kind of a measured leg, right, with that spike down. So the bears will need to either correct higher, right, up to resistance overhead, or get below this trend line with strength, right, for the retest of the lows tomorrow. The bulls, on the other hand, even though we pulled back into that correction zone of the spike and channel from earlier on today, the bulls do not have control. With this much strength, right, it feels like the rug was pulled out from underneath those bulls. Probably the buyers having a pretty good run and then taking their money off the table and price collapsed. So it'll take a real strong move higher before we can confidently start buying tomorrow. There are going to be some buying opportunities here at the low of this possible triangle, but it's not going to be as high reliability as we'd really like to see it. First of all, day starts off here obviously with a bull spike and channel. That bull spike and channel tells us to look for traps and to look for opportunities back inside the correction zone. Well, usually what happens is when the price pulls back into the correction zone, it's usually grinding lower here, and then, right, we can feel confident that the buyers still have control and we can buy it back up. This is not what usually happens, right? So this is a lot more strength than we wanted to see if we're going to have the ability to confidently buy into that correction zone. Remember, it's all about context. As the market pulls back into that correction zone, is it grinding, right, as we go higher here into that spike and channel, right? As it pulls back, is it kind of grinding lower, right? Grinding lower, or are we seeing it just bam, right? Are we seeing it really run? If it really runs like that, we got to give the bears the benefit of the doubt right now. So with that said, we pull back into the correction zone, not even a peep from these buyers, and that definitely tells me that something changed, right? Something shifted here. The buyers clearly not worried about buying low, right? They were worried about getting out of their positions, possibly here ahead of tomorrow's inventory report. So with that said, right, we get a lower high. That creates the trend line overhead. We have that higher low. This is kind of a weird trend line here. It may be a little bit lower here, so just be aware. I want to see some strength get below that low here, but it looks like we got that trend line there, and this, of course, will end up developing into a triangle, right? Into a triangle. So with that said, what do we know so far? Strong move down. Sellers will likely try to continue this move for a second leg lower. We have rising support, right, which is getting in the way right now, right, falling resistance, which creates a possible triangle. One additional thing here, we had the API levels from tonight every Tuesday evening, as long as Wednesday is the inventory report. Every Tuesday evening at 4:30 p.m., we get the API number. That API number gives me areas of resistance. It gives me areas of support, and these are little tiny little nasty levels of support and resistance that we're going to use tomorrow with all of our students in the trade room, right? So we'll be using those levels. If you're a client of mine, make sure you mark those down. We'll go over it again tomorrow morning. We come in at 8 o'clock Eastern time, and we'll trade around them, right? So definitely areas of support below for easy short-term targets, right? Bears have control. Areas above, right, for selling opportunities as the price comes off of that high. So if I'm a seller right now, what are my options right now to be a seller? What are my options here? Option number one, be a strong breakout, pull back, use that trend line, right? Use that trend line as resistance and sell that breakout pullback. Don't forget, we teach all the actual setups inside the advanced course here at School of Trade. So make sure you get started with there and get into the classroom sessions. You can learn more about those. Bears, right? Breakout pullback. Another option here would be up at the high, buyer failure, and back down, right? So selling the high, right? Selling an area of resistance, coming back down. The key is going to be to get this price off of this trend line. That's going to be the key component here. Get this price up off the trend line, and it may only come right here, right? That may only come as far as the 53.13. If I had to guess though right now, if they can't run it lower, right? Run up, back down. Because remember, the sellers aren't going to want to sell into that trend line, right? So be careful about that as this price goes higher. So breakout pullback below that low, breakout pullback, or failure at the high and back down. And if that's the case, then we know all of a sudden, right, we're working with, right, a triangle here. How about a buyer here? How about the buyers right now? What could the buyers be looking for? Well, here's where the aggressive stuff comes in. As a buyer, it's relatively easy to see this trend line here. And so what I've been looking for is what I call the 2-try rule. We got 1 try,